All right, in this explainer, we're going to do something pretty interesting. We're going to visually walk through one complete market DNA cycle from start to finish. We'll be looking at WTI crude oil, tracking its journey right from the initial setup all the way to completion. So let's dive right in.
So, what's the plan? Well, it's simple. We're just going to provide a clear visual documentation of this method in action. We'll watch each phase of the model as it happens, step by step. And just to be clear, we're only using the charts and data that were documented at the time, nothing else. Okay, so everything starts with phase 1. This is the setup. Think of this as the blueprint. It's where the entire plan gets laid out. We're talking about the geometric boundaries, the risk parameters, all defined before anything really starts moving. And for this specific case, this setup was documented back on December 15th, 2025. So take a look at this chart. This is basically our starting map for the whole cycle. You can see right there, the price has just hit the primary entry point. That's level M at $56.56. And see that other level just below it? That's PC, a potential secondary entry point. The other key pieces are here too. You've got triangle 3 and that big blue trapezoid. Together, these shapes define the potential path and the boundaries for this cycle. Now, this is really important. These are the risk parameters that were set right from the get-go. The model works with a hypothetical capital of $100,000, and a really key number here, an expected maximum drawdown of 5%. The plan also laid out a time duration for the trapezoid, 24 days, and a third triangle domain of 10.82%. All of these numbers are absolutely crucial because, well, they're what's used to figure out the right trade size. So, based on those risk parameters we just looked at, the model calculated a specific trade size, 0.42. And, just to be clear, this isn't for one entry. This size applies to each of the two potential entries. The first one at level M, and that secondary one at PC if it were to be triggered. And here's the formal definition of how that's done. Both trade sizes are calculated using the hypothetical capital, the investor's maximum allowed drawdown, the third triangle domain percentage, the risk coefficient, and the contract size. All right, so the plan didn't just have entries, it also had exits. There were 3 documented price targets that kind of map out the potential journey. The first target was the mirror line. The second was apex N, and the model specifically calls this a safe exit point. And the final destination, target 3, was the very top of that trapezoid. Now, if things played out according to scenario 1, meaning only that first entry gets hit and the price goes all the way to target 3, the expected return was calculated at 2.22%. Okay, so the blueprint is set. The plan is in place. Now we get to see what actually happened. We're moving on to phases 2 and 3, the journey in motion. This is where we stop looking at the plan and start observing the market's real progression, exactly as it was documented day by day. And right here, this is the first big milestone in the journey. On December 23rd, you can see the price is recorded touching the delayed mirror line. That contact, right there, that's what officially marks the end of phase 2. But the journey wasn't over. A couple of weeks later, by January 9th, 2026, the price hits its next major landmark. It reaches apex N of triangle 3. And with that, the documented phase 3 of the cycle is now complete. Now, remember that secondary entry point, PC? Well, as you can see, the price never actually went back down to hit it. So what does that mean? It means the cycle followed the path we called scenario 1, the one that was based only on that first entry at level M getting triggered. And that brings us to the grand finale, phase 4, cycle completion. This is it. This is where we see if the price reaches its final, designated destination, the one defined by the model's geometry right at the start. And here it is, the final snapshot. On January 14th, 2026, the price is recorded hitting $61.85. That's the upper boundary of the trapezoid. The moment that happened, this entire market DNA cycle was officially documented as complete. So, the journey is over. What now? Well, now we review. Let's take a look at the performance by comparing the original plan from phase 1 with what actually happened, the realized results. This is where it gets really interesting. Let's put the plan and the outcome side by side. First, the return. The realized return was 2.22%. That's an exact match with what was projected for scenario 1. Now, how about the risk? The maximum drawdown was just 0.67%, way below the 5% limit from the plan. And finally, the time. It took 25 days, which is just 1 day more than the 24 days projected at the beginning. Pretty darn close.
Okay, before we wrap this up, we have to go over a few very important disclaimers. First and foremost, this is not financial advice. Also, any leverage above 10 is prohibited. You should never invest essential personal funds. And finally, remember that this entire analysis is purely for public model documentation and for verification purposes.
And with that, we've completed our visual documentation of this entire WTI crude oil cycle, all the way from phase 1 to phase 4. For anyone interested in learning more, you can visit the source website right here. It certainly provides a fascinating look at a plan laid out and the outcome that followed. Thanks for watching.